Hi, hi everyone. Um, this is a sharing that I have done recently, and I shared with 100 participants. And I'm trying to redo this whole recording so that I can actually put it in my YouTube channel uh, for sharing purposes. So this afternoon, right, I'm really very uh, I want to share this thing called the Priceless Investment Insights from Warren Buffett. So, how many of you here know what is the two rules that Warren Buffett has for his whole entire investment journey? Okay, if you if you know, I'm going to give you some time. You can actually put it in the comment below, and then in the next moment, I'm probably going to share the two rules in Warren Buffett's investment journey. Okay, so so the two rules, which is the first one is never lose money, and rule number two, right, is never forget rule number one. Okay. Why these two rules evolve throughout his whole entire career, right? Because I think many of you, when it comes to the world of investing, right, the number one thing you always think about is try. I want to make more money. But for him, right, he is someone that has practiced these two rules for his entire life. And so this is a very logical mathematical formula that I'm going to show you. So assuming now, right, you have $1 or even a $1 million portfolio, and then the next moment, let's say you lose 50% of it. So you went from 1 million to 500,000. And then you will notice that for you to go into break even, right, you need to make a profit of 100, which is another 500,000 in a sense. And what's the likelihood of someone, right, making 100% comparing to someone losing 50% and create a very big impact to their portfolio? So you can see that not losing money, right, based on this uh, mathematical framework, right, you can see that a small percentage of losses will create a very big impact to your portfolio. Okay, so many of times I will actually share this Warren Buffett story with most of my investors is really because is that a lot of people quote his uh, quotation, his life sharing, but how many of you will want to have his wealth? And to really have his wealth, right, you do not just look at what he says. You have to see what he has been doing for the entire life of his journey. So, how many of you here know at which age, right, Warren Buffett started investing? If you can guess, put in a comment. He actually started investing at age 14, 1 4. Uh, this year, on the 30th of August, 2020, right, he will turn 90. So as you can see, right, he has been investing for the last 76 years. And this is what he has been doing for his entire life. In a sense, his bread and butter, right, is really investing the whole stock market. And most important, right, the next question I would like to ask you, at which age, right, do you think Warren Buffett became a billionaire? So during the 100 uh, participant webinar, right, some even indicate things like he became a billionaire at 81, which is another 7 years he became a billionaire. Some say in his 30s, some say in his 40s. And the real answer, right, is he became a billionaire after he turned 50, 50. Do you see that from 14 to 50, right, he has been investing for the last 36 years. So how many of you here, right, like I was sharing with you, do you want to have Warren Buffett's wealth? Okay. And if you want to have his wealth, right, don't even say have $1 billion. Let's assume you have $1 million, and then your monthly or yearly portfolio, right, it basically gives you a 5% return, which is 50,000 a year, right? How many of you want to have that portfolio? And many of us, right, will want to have Warren Buffett's success. At age 87, right, he has a wealth of about 80 billion. And then last year, right, his dividend portfolio, right, created a $3.4 billion dividend payout to his company, to him himself. So you can see, right, many of us want to have his success. But how many of us will want to invest for the last 14 to 99, right? Let's assume about 76 years to achieve this level of success. So this is one quotation, right, that he shares with all his investors in terms of time horizon. Okay, so for him, right, his investment holding period, right, is forever. And why I want to share this with you, right, is because many of times when I talk to my own investors, right, they are always looking at the year-on-year return, or they will keep asking me like, "What do you think this year? How many percent am I going to generate for them, etc., etc." But they do not understand, right? In the world of investing, right, holding period is the most important to your success. Even in the Morningstar research report, right, if one person invests for the next 15 years, right, in terms of annualized return, he is likely not to lose any money. But that is based on uh, Morningstar research on the time period since 1926 all the way to I think 2017. So it's a research that you can Google on the uh, Google online. So so in the world of investing, I really want you to add this principle into how you are going to invest your money. Okay, which is the holding period is must be forever. Because when the moment you have this forever mindset, right, you will know that the dynamics of how you choose the company and put it into your portfolio will be very unique, right? You're not going to go for the hottest trend in the market. You are going for the most sustainable business over time. Sustainability talks about not just being profitable, uh, and profitability is one thing, growth is another thing. And the third one, right, is the ability to generate cash during times of crisis like today. So that is why, right, uh, Warren Buffett is consistently able to actually beat the stock market. When I say the stock market, I'm talking about the broad market of in terms of S&P 500 performance. So this is a track record for the last 30 years, which is 3 decades of track record between Warren himself and the S&P 500. As you can see, right, just by buying a broad market spectrum of the US market, your annualized return is about 9%. But obviously, Warren Buffett beat S&P 500 hands down. For the last 30 years, he has an annualized return of close to 15%. So this is a recent article from Market Watch also. So they actually correlate Warren's performance. Why I want to share this, right, is because recently I was actually quite angry or even frustrated when day traders. I mean, I'm a trader myself. I'm also a day trader. Day traders suddenly said that because they make more money than Warren Buffett, right? Not say more money in terms of percentage, they actually able to make like they were saying like 1,000% in a very short period of time. Maybe not 1,000%, maybe like make $1 million within a short 1 to 2 month period. Right? They think that they are much better than Warren Buffett, which is nonsense. I really believe that if you have a 30-year track record, right, then you come and talk to uh, then you put yourself in terms of having a benchmark with Warren Buffett. If not, right, a trader is a trader. Investor is very unique. Uh, I want to share this thing, right, where even I myself as trader, right, I always see that for traders, right, what we are trying to do, right, we are trying to use our high income skill set to generate cash flow for ourselves. Okay? But for a trader to be successful, right, the trader have to be healthy. Healthy in the sense that physically you are able to trade, okay, in terms of psychology and emotions. And that's why even I myself as a trader, right, today I'm still investing my money. Why? Because I'm looking for great companies that hire millions and millions of people. And the job of all this entity, right, is to generate cash flow for me as an individual, like dividend or even growth in terms of share price. So this is why, as a even a day trader myself, right, I still invest in the market today. Okay, so do take note. Uh, there's always a difference between trading and investing. Okay, next is something that Warren Buffett has shared during his recent February interview with CNBC. So the interviewer actually asked him, right, Mr. Warren, what do you think about the economy? What do you think about COVID-19? What do you think about the interest rate direction? For Warren, he actually said this thing: you can't predict markets on daily headlines. So you see, even for him, right, who has invested for the last 76 years, right, he is able to say this, right, and tell the world, right, you can never predict the market, you can never predict the news. Don't try to do that because it's impossible. You know, when you hear someone like him say this, right, it really hit you very strongly. Why? Because everyone, when it comes to the world of investing, right, they want to know when is the best time to invest. They want to know when is the right time to invest, what price they want to go in. But they've forgotten the part where Warren started the conversation, right, is that stay invested over the long term. Okay, why is that so? Because according to Warren Buffett, right, he said that the stock market is a money transfer machine from people who are impatient to people who are patient. So for him to say this, right, I think it carries a lot of it. Why do I say that? Because think of it this way: he is the only one that has invested since 14 all the way to 90 years old. Over here, most of us are not even in our 70s or even 50, but he himself have went through multiple crises. So uh, I feel that there's a lot of wisdom, there's a lot of priceless wisdom in his way of investing. So that's why the next chart that I'm going to show you, right, this chart actually indicates the Dow Jones Industry Average, which is the top 30 companies in US with 120 years history. And why this chart is so important, right, is because uh, if you look at all the lines over there, right, you will notice that each of the line represent a news event. And then if you look at the far right bottom, right, there are about 121 news events. What it shows, right, is that in 120 years, right, we have 121 news events. In that sense, every year, right, there is a news event. Okay? And again, I want to tell you, this chart is basically telling you, right, human innovation always triumphs fear. Fear of the market, like you cannot predict the news. You don't know what's going to happen. You don't know whether is there a cure. You don't know whether is there a vaccine. You don't know many things. You don't know where's the interest rate direction. So that is why, right, never predict the market, according to Warren. And do take note of one thing. Uh, the share stock market, right, it is, or the companies that you are investing today, right, their main objective, right, is to generate profits and return for investors. So on the long run, right, there's these two factors, right, uh, that will help the economy to continue to grow. I will probably not share this because this is a real deep down secrets that have guided me for the last 20 years of investing, and I'm very happy with the portfolio that I created for myself. And do note that this is really the three things that I will want to conclude with all this sharing. Okay, so priceless investment insights from Warren Buffett. So remember number one, remember rule number one and rule number two. Okay, which is never lose money, and don't forget rule number one. And then number two, priceless investing insights, right, is understanding long-term investing. Okay, staying invested is more important than uh, buying the dips, because buying the dips is close to impossible. Okay, and lastly is don't predict the news. They don't predict the market, don't predict anything. Okay, buy companies that has transcends time, that are quality versus quantity. And then when you buy good companies, the companies must be able to overcome crises and multiple crises that they have overcome before. So do take note of these three secrets, and I hope that you will follow the YouTube channel, like this video if you think that it helps you, and most important is do subscribe to the channel and turn on the notification notification bell and continue. I'm going to share more content with all of you, and let's learn throughout our journey together. So thank you, everyone. Hope to see you again in my next webinar.